I'm Charlotte McLeod with the Investing News Network, and here today with me is Michael Alkin. He's founder and director of research at the Stock Catalyst Report. Thank you so much for joining me today.
Thank you for having me, Charlotte.
Great. So we've both just been at the International Metal Writers Conference,
Right,
where you spoke about uranium.
I did.
In your talk, you identified a couple of major issues that could affect the market in the coming years. One of them is Kazakhstan establishing a Swiss marketing subsidiary.
Right.
Can you tell me why that's such a big deal?
Sure. So Kazakhstan is the #1 leader producer in the world of uranium at about a 40% market share. And that market share has come up from about 9% about 12 years ago. And post-Fukushima, the nuclear event in March of 2011, they were putting a lot of uranium into the market. And it's the way the transfer laws work. There are laws in Kazakhstan that impact how they sell uranium. So Kazakhstan's transfer laws say that to prevent money laundering, that when something comes out of the ground, it has to be sold into a market where there's a publicly verifiable price. Now, the way uranium pricing works into the utilities, it typically could take, they typically do 7 to 10 year contracts. Very small contracting takes place in the spot market. But when Kazakhstan is pulling it out of the ground, they have to sell into the spot market. So you had a very depressed uranium market post-Fukushima, and after that, you had the Kazakhs taking market share by selling into a depressed market. This Swiss marketing arm now is a subsidiary they're establishing in Switzerland. And what this allows them to do is take the uranium that they mine and then sell it to the Swiss subsidiary, where they can pool all of that inventory. So rather than having to sell it into a depressed spot market, the Kazakhs, who control the market pretty much at 40% of the market, they now can become what's called a swing seller. So they can choose when they want to sell and to whom they want to sell into the market. And when you have that big a producer, if you think about Kazakhstan at 40% of the market, that's almost 3.5 times bigger than Saudi's impact on the oil market. So they can really have a dramatic impact on pricing.
Okay. The other major issue that you identified was how much uranium production is either from Russia or influenced by Russia.
Right.
Can you talk about the implications there?
Absolutely. So Russia and the Russian sphere of influence, Kazakhstan being, we would say, under the sphere of influence, and other countries, it comprises 60 to 65% of global uranium production. And that can have a major impact when you think about right now where we are with the geopolitical tensions, especially in the U.S. In the U.S., as an American living there, there's almost a McCarthy-esque feel to it going back decades ago, to where there's some anti-Russian sentiment. And to the extent that there were any sanctions to be imposed or anything else like that, it could be real damaging to the U.S. And the reason that is the U.S. produces 50 million pounds of uranium, and they consume 50 million pounds, and they only produce less than 3 million pounds. Half of those imports come from Russia and Russian-friendly countries. So if they were to withhold shipments, that could affect what's 20% of the U.S. electric grid.
Okay, so what should the U.S. be doing? Should they be making it a priority to increase their production, and do you think that can happen right now?
I don't know that it could happen immediately, because you've seen the number of mining companies just go down precipitously.
Right.
So there's still a handful of mines, but there's a lot of resource in the U.S. One of the things that we think that could be done is that you can tax incent the utilities to buy American uranium. President Trump is out there talking about make America great again, buy American. Well, an easy way to buy American is to put those uranium mines back to work.
Okay, so we've talked a lot about supply factors, I think. What about demand? What's most important to watch in terms of demand?
Sure, yeah, so that's a great question. Uranium's a growth industry.
Right.
And people don't think that because the stock prices are down 90% and so on. But from a demand standpoint, there's $750 billion being spent around the world in capital building these. It's clean, it's safe, it's always on, and it's a 2 to 3% grower. China's a big portion of that, but in other parts of the Middle East and other developing countries, you're seeing it. I think sometimes investors get confused because if you're an American or a Canadian, you hear a lot of negativity about the growth of nuclear power, but it's occurring outside the rest of the world.
Okay, so because of all those factors and other ones, I'm sure you see a bull market coming for uranium finally. How quickly do you think that will happen? Do you have a price prediction at all?
It's great, great. So I think what's happening is, if you look at the narrative is completely focused on Japan. And of course, Japan came offline after the earthquake. 13% of world demand came offline. But that narrative is a little long in the tooth. And I think when uranium is trading at $20 a pound, that's kind of priced in. I think there are a couple of things that can really impact the price of uranium. One is the Kazakh arm, and I should also mention Kazakh is going to be going public in 2018, Kazatomprom is. So they're incented to get their cash flows looking good. But the second thing is there's something called underfeeding that occurs, and that's been a very big source of secondary supply on the market. As mines produce primary supply, but secondary supply comes in some different forms. The Japanese had some inventories, but when uranium comes out of the ground, it goes through a process and winds up at an enrichment facility. And sometimes when they're under capacity, they have the ability to produce some more uranium out of the uranium they get. And when they do that, they sell it to the nuclear power plants. Now, they were selling that product for over $100 per unit, how they price it. That's down now to the mid to high 40s, and that's getting to their cost of production. And they're not in the business of selling it at a loss, just like the miners, and the reason they're cutting production. So I think you'll start to see underfeeding start to come offline to some degree. I think you see Japan reactors starting to kick in. And the third thing that's happened is the Department of Energy in the U.S. has reduced the amount of inventories they're selling into the market by over half. So those three catalysts, it's not just Japan. It's underfeeding, it's Kazakhstan, and it's the Department of Energy. I think you're going to start to see, and the production cuts, start to see the price start to go up.
Okay, last question.
Sure.
Sounds like there's lots of opportunity there. If you're an investor, should you be buying stocks? What should you be doing to get ready?
Right. The mining industry is inherently a very risky industry, so it's up to each individual as to what they're going to do. And there's different ways to play it. There are ways to play it through those who are near-term production ready for when they decide they want it. The prices incentivize them enough to go back into production. There are some explorers doing some great work up here in the Athabasca Basin. So I think it's each person's risk tolerance and understanding that these things don't turn on a dime. But when you look at the risk-reward, it's pretty dramatically skewed to the upside, I believe.
Okay, well, thank you so much for joining me today.
Great, thank you for having me.
Great, thank you.
Okay, great, thanks.
Yeah, once again, I'm Charlotte McLeod, and this is Michael Alkin.